People from other countries are thinking, you guys are in trouble, we're buying gold, while Americans are buying stocks and thinking everything is fine. There aren't many options for you when you blow up a debt bubble. If you don't pay it back, it will blow up. It will blow up because we won't pay it back. That is happening right now. The time has come for the debt bubble to pop. We can't handle our debt anymore. So, right now, the creditors are basically red pulling us, and no one is paying attention. Please, let me know who the lenders are. We owe money to people from other countries, sold as a loan, and when the creditors leave, I won't care about your dirty debt anymore. The dollar won't crash next year or even next month. It's going to fall. On top of that, most investors don't know what it is. Just a few weeks ago, silver hit a new quarterly high, closing near $49, which is more than 65% higher than it was at the beginning of the year. Gold went up past $5,000 before going back down. And that's just the beginning. These kinds of price changes have never happened before. This is a clear sign that a currency system is starting to fall apart. But when international players start to pay attention to real assets, Americans are daydreaming, distracted by other things, in debt, and unaware of what's going on. The people who planned this disaster are counting on that. By the time the herd gets scared and starts buying gold and silver, it will be too late. Prices go through the roof, there is no more physical supply, and paper markets crash. When that happens, the news won't cover the price of silver at $150. It will be the new baseline. So, what brought us here? What is it about silver that makes this global financial reset good for it? I say we let it out. He says in a desperate tone, okay, then I'll try to make some money through tariffs. Because of this, the economy suffers. In short, tariffs are not good. No way. They're not good in general. It's really a tax. Someone will have to pay it. This is not an exception. The government is going to get that cash. And how exactly is the money being gathered? Trippin's dilemma led to this. And to quickly explain Trippin's dilemma, it was the idea that if you had, he said that the US is in a tough spot because your currency is the reserve currency. Also, having the reserve currency is not a good thing. It isn't good. You can't compete and your economy is weaker as a result. The main things are money transfers, interest rates, and your currency. Since your currency is the reserve currency, it will naturally be the most valuable currency in circulation. Sadly, there isn't much you can do to change this. There you have it. Your currency will be the strongest because everyone will want to buy it. You have this big advantage. It makes you look like you're ahead of the curve, but in reality, it hurts your economy and makes you look bad overall. It's so bad. It feels like you're putting your life on the line every time you eat it. You're just asking for trouble. Since the 1980s, the United States has been doing this. We have been doing things that are dangerous. It has also caught up with us now. And that is why gold keeps going up to $3,800. You are all going to have a rough time because gold is going down. Sadly, this is out of your hands. Von Mises said that there is only one answer. The main point of what he said was that a debt bubble can lead to two different outcomes. It will blow up if you don't pay it back. It will blow up because we won't pay it back. That's how things are right now. The debt bubble is bursting, and we can't handle our debt anymore. Creditors are basically blaming us right now, but no one is paying attention. Please tell me who the people you owe money to are. People from other countries owe us money, sold us a loan. And when the creditors leave, I won't care about your dirty debt anymore. We lost. The United States has built its empire on a mountain of debt that keeps getting bigger. That base is also starting to fall apart now. Politicians put off dealing with the problem for decades by borrowing trillions of dollars to pay for wars, welfare, and Wall Street bailouts. Each crisis led to more debt, stimulus, and quantitative easing. Even though everyone else put up with it for a long time, the numbers just didn't add up. In fiscal year 2025, the United States had a budget shortfall of more than $2.5 trillion. Adding to the already huge national debt, which is now over $40 trillion. And it's getting bigger. That's more than 150% of the GDP. Look out, the debt trap is coming. The US needs to borrow more money to pay the interest on its current debt. The Federal Reserve will have to work harder to pay off the debt, the government will issue more bonds, and people will be less likely to trust that they will be paid back. But wait a minute. The Federal Reserve's printing presses keep making the money less valuable. At that point, the real problem begins. This is Triffin's dilemma, a flaw that is built into the system. As the world's reserve currency, the US must export dollars to keep trade going. But keeping up this level of spending and trade imbalances will hurt the economy over time because people are looking for short-term cash. It's a problem that can't be solved. Increase the dollar's demand around the world or protect its value? You can't do both at the same time. After all these years, the rest of the world is finally calling the United States out for abusing this privilege. Foreign investors are less willing to lend money to the US to cover its deficits. They can clearly see the signs. A sovereign debt crisis is one less thing to worry about. It's here and now. The dollar isn't the only thing that's going down. They are saying no. As people lose faith in the system, silver is becoming a real option instead of the mainstream's old money system. The debt boom began at that point. So, the first debt explosion happened around 1980, so Reagan became president. Our national debt was less than $1 trillion. He left work at 227. It's just a pallet of metal. In the year 2000, the national debt was between $5 and $6 trillion. It's 38 and 37 now. As a result, we've been steadily rising to new heights. This has been Triffin's problem since the year 2000. It's true that living off of debt is a steep slope. Since 2000, our average yearly debt has gone up by 8%. There can't be a GDP of 8%. There is no such thing as absolute nonsense, is there? We have been living at this level because our debt has grown by 8% every year. Now you have to ask, why? Why do we need to raise the debt by 8% every year? You got it, right? That's why we're not making any money. So to get the economy going and grow the GDP by 2 to 3%, we need to go into debt. Our current way of life is paid for by our debt. Bush talked about this voodoo economics, but no one paid attention. They still don't care about it. The debt bubble is not talked about at all in the mainstream media, except for those of us who work in alternative media and podcasting. For instance, CNBC's halftime show and closing bell broadcasts didn't use the phrase debt bubble at all. Once a month, people talk about the budget deficit, but no one has ever talked about a debt bubble or crisis. I mean, some experts might mention it at the end of the day, but most of them just ignore it. That is why the price of gold has gone up recently. That's why it will keep going up, because Triple's problem is still going on. There comes a time when you can't do anything to stop it. You are trapped in a doomsday loop. No matter what you do, your debt will become too much to handle at some point. Think about the big, nice bill. Wasn't it? Trump didn't care at all about that bill. He didn't have many choices. I thought he would have balanced the budget if he had the chance. He would have balanced the budget if he could have. If he hadn't run a $2 trillion deficit, the economy would have gone into a recession. It's called tax domination. You have to spend money because the economy will fall apart if people don't. So, I felt the need. There is a mass exodus from US treasuries that is getting faster. Foreign central banks bought American debt and got a guaranteed return, which is why the safety net lasted for so long. But that false belief has fallen apart. In 2025, more than $1.2 trillion in foreign ownership in the United States Treasury fell as countries like China, Japan, and even longtime friends like Saudi Arabia sold off their holdings. No, that doesn't change the portfolio. Everyone in the US banking system has been voted out. In addition, they are not just selling, they are also rotating. That money is going right into gold, silver, and other things you can touch. Russia has made a brave move away from dollar-linked reserves and toward bullion. In just 9 months, China's central bank added more than 300 tons of gold. Turkey and Brazil, two much smaller countries, are also running out of money and building up their gold reserves for strategic reasons. Why? The reason is that they are expecting a global currency reset that will replace the dollar with a new currency system. This is the last step in the dollar's rise to power. Not a sudden collapse, but a slow but steady withdrawal from the system. As the door stays open, other countries are quietly leaving before the collapse. There are many things that go into it, like interest rates and inflation. The most important thing is to stay alive. The US has made the financial system a weapon through capital controls and sanctions. So having assets in dollars is now a geopolitical risk. Smart investors aren't just sitting around and waiting for things to go wrong. It had already gotten to them. What happens to silver when everyone starts investing in real estate? It's being sold as a less predictable alternative to gold, which is an undervalued asset that could make more money if the market gets better. When people lose faith in fiat money, investors stop asking questions. They just want something real. People who can see a storm coming are putting more and more of their money into silver, which is a metal that can be used for both industrial and monetary purposes. I don't know. Earlier today, silver went up $2, but now it's back down. Well, here we are. Gold has gone up by $50 today. This has happened over and over again for the past 18 months. The market has stayed in a tight range whenever gold has dropped, and the price of gold has been forming a flag that it just broke out of at 3,700. But for a month or more, it stayed in this narrow range of about 3,300 to 3,500. And every time it hit the bottom of that range, it would just turn around and go back to the top. It looked like there was always a cycle of going down and then back up. In other words, it was keeping an eye on how the stock market was moving. In this case, gold would go down a little bit before going up again when the stock market did. Got it. I will go with you. Okay, here you go. The stock would go up and the gold would go down. Gold has been going up along with the stock market, but it has done much better than the market. I think the stock market will end the year up about 15%. I think it's up about 13% to 14% from last year. I think it's a little more than 13. Gold has gone up 45 to 47% this year. So, gold is at the top of the list, not the stock market. With gold at the top of the list. Gold not only follows the stock market, but it also does much better than the market as a whole, even though the stock market keeps hitting new all-time highs. But gold is at the top of the list.